Hey everybody, Chuck Barone here. Wednesday, November the 2nd, 2022. It's Fed Day, yay! St. Jerome out today making the markets go crazy. Anyway, before we start the show, as always, I want to thank everybody for their support for the channel, for the videos, all that you guys do every day to keep this channel going. We really appreciate your guys' support. Couldn't do it without you guys. We love you. Markets today. Well, it was a crazy day in the markets, guys. Stock market kind of was sitting flat. If you look at the charts, today's chart was kind of a crazy one, right? It kind of sitting flat. They announced their rate hike. Here comes Powell. And initially his comments were sounding a little bit dovish, so the market, boom, reacts, takes off. As he continues to go on with his remarks and take some questions from the press, he sounds a little more bearish, dovish, hawkish, whatever, bull, bear, a little more negative. Boom, markets just take a dive, heading straight for the basement, finishing pretty negatively today. I think that now we got the pace and the tone set for this market. I think this correction is going to keep going, unless, of course, they parade the yo-yos out there to kind of try to mitigate the damage. We'll see. Like we've been telling you guys from the very beginning, get yourself into a defensive position. If you've been buying utilities, you're doing good. If you've been buying healthcare stocks, you're doing good. Military stocks, dividend-paying stocks, preferreds, all of these sectors are still holding up okay in this market, even with the market correcting like it has. So we hope you're taking our advice. If you are, you're probably doing better than most of your friends are, right? The bond market today, not great day for the bond market, all over the place like always. It's just the bond market trying to decipher this stuff. So basically, the way it ended up today, the 10-year basically sitting flat at 4.06% interest. The 2-year, though, up 6 basis points to 4.60% interest rate. So now you got a 54-point spread inversion, 54 basis points. The market just does not look functional right now. It's flashing red lights, recession coming. I think we should probably take this signal seriously. It's just going to be one of these weird recessions, I think, where until employment calms down, it's hard for me to believe that the entire economy is going to tank. I think it might be a sector-by-sector kind of weird recession where real estate's going to lead the parade down and other interest rate-sensitive areas of the economy going down, with other parts of the economy staying at least decently strong. The dollar today, big update, of course, interest rates up, strengthening the dollar, up about a half a point to 112.05 on the index. The dollar's the champ right now as far as relative strength goes against other currencies. We'll see how long it can hold up, guys. I think that the Eurozone, with the inflation rate they had, they were already talking about pausing interest rate increases. I think now they're going to kind of be stuck raising them. They really already have a big fear of a recession with all this energy issues they're having over there. Things not going to do well in the euro, but here with the strong dollar, that's keeping our imports a little bit less. It's kind of helping us with our inflation picture here. We'll see how long it can last. With the dollar up today, of course, metals inverted. They kind of work the opposite way of the dollar. So when the dollar's up, typically metals down and vice versa. So with the dollar up strongly today, metals down. Gold sitting at $1,637 per ounce, down $12 today. Silver sitting at $19.30 per ounce, down about 40 cents today. Down days always are terrible, but these are not dramatic numbers. The markets are kind of holding their own in the face of this strong dollar. I like metals right now, guys. I think that they're really looking for a reason to rally. When this dollar turns and starts coming back down to earth, I wish I could tell you when. I can't, but I can tell you it will happen. You're going to see, I think, a pretty dramatic run-up in metals. So if you're a metals person, get ready for that. Oil today up pretty strongly, $89.22 for a barrel of West Texas Intermediate. Oil's been gyrating, but it looks now where $85 per barrel used to be the resistance. It looks like that's the new support number. bouncing up off of there pretty easily, getting back up toward $90 per ounce, or $90 per barrel, forgive me. Gas today, though, natural gas has been the crazy market. So yesterday was a massive down day. Today, a massive up day. Sitting at $6.16 for the million BTU. That's up about 8% today. So this market's really been going up and down 5 to 10% a day, just gyrating all over the place. I guess if you're a trader, that's ideal, right? Find a trading range and trade it up and down. And that's been giving them quite a bit of room to trade. It just sucks if you're a natural gas user and you're looking for some steady in the price of what you're going to pay. Well, this market isn't really so great for that, is it? Bitcoin today down about $300, 20,174, still holding 20,000 support. I think Bitcoin down with the market, obviously, today. It's been kind of just following along with the stock market. I would like to see it break, have a really big up day in the face of a down stock market, but haven't seen that yet. In the news you guys need to hear today, as we all know, today was Fed Day. Federal Reserve, they finished their Federal Open Market Committee meeting today, raising rates another 75 basis points, 3/4 of a point. Now rates, they say, between 3.75 and 4%. I tell you, the actual rate is 3.85% on the Fed funds rate. It was really an interesting phenomenon. As I was telling you guys over the past few days what was going to happen today, the rate increase was kind of already baked into the cake. Everybody kind of knew what was coming as far as that rate increase today. The interesting thing was going to be the market's reaction to Powell's comments and his answers during the Q&A with the media. So the market, Powell comes out, starts talking, and he said that the Fed would take into account the cumulative effects of their tightening the monetary policy, which the market took as a sign of a softening stance on rate increases, and the market immediately responded to that, taking a pretty nice jump in the market, seeing that maybe there would be a pause or a lessening of their efforts to raise rates to bring this inflation down. But then Powell went on to say more remarks. He said that it is premature to think about or even talk about pausing rate hikes. The market again reacts instantly, tanking, finishing the day down pretty strongly. Some of Powell's remarks were, as usual, you listen to these guys, you have to I would like to have a transcript because I get my highlighter out and kind of have to parse every little thing that they're saying. But some of the highlights of what Powell said today, he said that he was asked about the possibility of a soft landing. And I always joke about when I hear the word soft landing, picture the Hindenburg, blowing up as it's landing, because that's usually what a Fed soft landing looks like. He was saying that the window for that to happen is narrowing, meaning in Fed speak that it's not going to happen. He did go on to say that it was possible. I say that that's just market chatter. We're not going to have a soft landing if they keep raising rates the way they are. If real estate is any indication, guys, I'm telling you, man, it is tough out there in real estate right now. We'll see. This Federal Reserve Day today is crazy. He said that there is no sense in the markets or pricing that inflation is coming down. So they have no feel that what they're doing so far is working, which is going to cause them to continue to be aggressive with rate hikes. He went on to say that consumer spending remains very strong, that the market for jobs remains very strong. These are things that the Fed sees as inflationary, so they're going to continue to raise rates to fight those things. Overall, his comments after the meeting were pretty bearish in my mind. I think that Powell, at least as it stands right now, and I think he believes his own bullshit a little bit, but I think that they're going to go forward with this half-point increase next month in December. We'll know pretty quick. I think that their terminal rate, which is where they believe rates are going to peak out around 5%. If they add a half a point on in December, that'll bring the Fed funds rate to 4.35%. So they'll still have about 3/4 of a point to raise next year to get to that terminal rate. We'll see how the data comes between now and then. I think that CPI this month is going to be a very, very big report. I think that if the CPI comes out negative or shows very little effect of these rate hikes in bringing inflation down, I think that you could see another 3/4 coming up in December. It sounds to me and appears to me, because we got to say it like we see it, right, guys? And so far, the Federal Reserve and Chairman Powell, the St. Jerome, as I call him, of St. Jerome of Jekyll Island, have stuck to what they've said they're going to do, which I give props for, because in the world we're living in, most people don't, right? In other news today, I know that this Fed market thing did overshadow pretty much everything, but I thought this was important because this kind of goes along with the Fed. The job market ADP report comes out today, and the job market sizzling hot still. ADP telling us 239,000 new jobs created in October alone. That's a pretty big jump from last month. The job market looks really hot. They said that layoffs have dropped to 1.3 million in September, which is the fewest layoffs in a month since April. Private payrolls are showing a pretty big increase. So now I think that this puts a lot of weight on Friday's unemployment information. Thursdays and Fridays we'll get initial jobless claims. We'll get the unemployment rate information. I think unemployment rate's going to come down again. I think this is going to force the Fed to keep the pedal on the brake on this economy. I don't really see a reason. I don't see a reason why the Fed should stop their inflation fight. The economy's, in my business, really crappy, but if you look at the rest of the world out there, guys, Vegas, I was reading in the newspaper today, Harry Reid breaks a new record. Vegas got its 19th, or Nevada just had its 19th consecutive month of winning $1 billion at the gambling tables in the state. Tourism continues to keep rocking and rolling. People typically don't come to Vegas and blow lots of money if they feel like, their job or their security or the economic future was in any kind of peril. I think, and in my mind, Vegas is a big indicator, obviously, because I really think that Vegas is a bellwether, or the canary in the coal mine, so to speak, for what's happening in this economy in the country. I think that a lot of parts of the economy are continuing to do well. So it's just going to be fascinating now between this federal open market committee meeting and the next one to really get a good handle on this data, because we're not as certain going forward with Fed policy as we have been. They've been pretty much telegraphing these 3/4 point increases pretty blatantly. They kind of been out front on this 0.5 point one, but after that it starts to get a little bit murkier. I think we'll get some indication of what the policy is going to be by the data coming in. We're going to go over that data with you guys as it comes in over the next months and, hopefully years to come. Hopefully, it won't all be in a situation like this, and we'll be hopefully talking about buying stocks and, getting involved, and things are going up, and, the other side of this market, because since we've started this blog, it's been all negative. It's been recession. It's been 2 quarters consecutive negative GDP. It's been, everything just looking darker and darker. And then you have the real estate collapse, which is the industry I'm in. So hopefully down the road we'll have some positive. We'll be able to recommend some good things to get you guys making more money. If you've been listening to what we've been saying, though, since we started this blog, you're in better shape than most right now. You've been saving a little bit more money than you used to. You've been spending your money a little more thoughtfully than you used to. You're paying down debt a little bit as you can, hopefully not adding any new debt on. And you know, you got your portfolio into a more defensive position, so you're not suffering losses like the open market is. I hope that you guys are listening. You know, this is our show, unlike Greg's and some other financial guys, is not as much entertainment as it about, you know, here's reality, here's what you're going to be dealing with. And I hope you're taking what we're saying to heart, because it's good advice. It's fundamental, I admit. You know, there's not a lot of razzle-dazzle here, but it's sound advice. And if you've been following it, you're probably hanging in there pretty good. Anyway, guys, that's it for today. A crazy Fed day. Tomorrow, lots of data coming in. I'm sure there'll be more ripples from this Fed meeting and more parsing of Powell's comments. So we'll have more data on that, and more information coming to you guys tomorrow. We appreciate your support. As always, if you like what you're hearing, hit like. Ask your questions in the comments. If you have a question that's a little more serious, private, or detailed, it's askchuckbarone@gmail.com. AskChuckBarone@gmail.com for your more serious questions. We appreciate your support. We'll be back again tomorrow to follow up all this crazy with probably more crazy. Until we talk again then, guys, take care.